Good morning, everybody. Happy Monday. Happy Valentine's Day. Happy post Super Bowl Monday. This is pre-market prep. I'm Spencer Israel. I got Joel here. Dennis will be on as soon as he can. He says he is scrambling to trade the Russia situation. So whenever he joins us, he'll join us. But that's going to be the theme of the show, right? It's a macro kind of a day. There's nothing specific happening out there. We got Russia. We got this emergency Fed meeting. Don't forget about that. We may get a rate hike today. Who the heck knows? So that's kind of the theme of the day. We'll have Tim Quast on as we do every single Monday from Market Structure Edge. So that's the situation we've got here. Go ahead and hit that like button. Oh, and check out, before I forget, I'm going to plug our new YouTube memberships program. Check it out on YouTube. We'll talk more about that later. But that's the thing. So hit that like and let's roll the intro.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Boom. We need to fix that ending of that intro. It ends so suddenly. Good morning, Joel.
Good morning, Spencer. How you doing, old chipper? You obviously the kind of early ending for the Super Bowl, and you're doing okay. You're not
early ending. Early
Yeah.
ending? That was an early ending. It ended past 10 o'clock. That's late for me.
Yeah.
That's not
yeah.
bad. But actually, before we start, I do want to say thank you, Dino, in the chat for letting me know that you are safe. Dino, are you really still in Kiev? Okay. Dino is safe though. That's all that matters. Dio is in Ukraine, and he says he's safe. So that thank you for telling me. And Matt Hammond, who we have on Benzinga Live every Monday, is also in Ukraine and is in transit right now. So I hope everyone who's in Ukraine is safe because things are happening, I guess. So Joel, we'll bring up your charts. You run through the overnight session here, and then we'll just talk about how this whole thing is shaping the market here this week.
I thought there wasn't any transportation. I thought they cut transportation. Was that from the U.S. going there or
No, that was Canada.
Canada? Okay.
Yeah, I'm talking about Ukraine.
Okay. All right. Well, we got a big old range in the S&Ps overnight, as you could see. This 15-minute chart, upper left, we had a little bit of a rally that faded hard, and then 5:30 this morning, we got way into the 4,400 or 4,300 handle. Haven't been there in a while, and nothing there. There wasn't there on the way up, but not much there on the way down. So now we're way off that low, 60 handles off the low of 43.54. So I don't think you're going to get a shot at that area today unless we do get some macro news. On the upside, of course, you want to hold the close of 09 and then above that pre-market high. Things kind of open up again. So I don't know. Buy the dippers out last night, and I don't know if the buy the dippers are going to get the same chance at those same levels. We'll see what happens in today's session. Crude, maybe what at the center of this battle, crude and natural gas. Crude is down 90 cents at 92.20. Gold perking up here, clearing 1850, up 1340 at 1855.70. Silver doubling on a percentage basis. That's up 33 cents at 23,705. Bitcoin just kind of neutral here, up $275, 42,665. And let's just call Ethereum flat. That's up $12 at $29.31.
Joel, I'd like you to pull the S&P futures chart back up here because this is where we are right now. This just goes to show just how unpredictable things are, and this is probably why Dennis is not here, frankly, because look at what just happened in the last couple of minutes there.
You want to go minute chart?
Well, I'm looking at those green candles, right? Like, why do we spike just there in the last 2 minutes? I'll tell you, because Russia's foreign minister just said that there is a path forward for talks, right? For de-escalation talks. So the market is like super sensitive to any development right now. We've been talking about how it's a difficult market to read for a while, but there's 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 so little conviction out there on either side that like any little comment by anyone on either side of the story is enough to move the market like it just did. So it's almost impossible. You basically can't predict the next 5 minutes because there's two gaping holes of unknown. You have this Ukraine situation, and you have whatever the Fed's going to do
Yeah, what's
today.
going on with that? What is the official word on the Fed meeting? Jerome did not text me over the weekend. Like, what time is the meeting? Who's going? What are they serving for lunch? I mean, what is going? What is the exact details of this Fed meeting?
11:30 a.m. Eastern time is when the Fed meeting will start. I have no idea when it's supposed to end. I will note that James Bullard, the man himself, will be on TV in like 20 minutes. So we'll have to keep a close eye on the market when he's speaking. But I don't think anyone really has a good expectation of why they even called the meeting. I'm sure they'll talk about it, but why they called it, what are they going to do? I don't know. So you have these two massive unknowns. And Nick says he heard it's a cold buffet. Okay, maybe a hot lunch, maybe a cold lunch, whatever the case may be. This is like the market is just a dust in the wind. It's just going to blow in either direction right now because there's these two massive unknowns that we have to deal with, and I don't even know how you do anything right now. Frankly, I mean, I don't know.
Maybe some leftover pigs in a blanket from Super Bowl parties.
Maybe.
Maybe something like that. Well, just to illustrate your point, I went back to the 15 minute on the upper right, and you look at the actual close, like where the world is marked. And I think you guys know what I'm talking about when I talk about the mark, right? I taught the mark for individual stocks and also for the futures. So the mark is 0950. The last half hour's print, last after hours print, I'm probably the only one that has that designation, was 44.18, where all the traders quit at 5 o'clock. And so we're basically right in between those levels. So the importance of the close, I'll just emphasize it, 44.0950. It's hard to make it say, hey, this is a 5-star level when it's traded through it so many times. But it's just measuring the sentiment of everything what happened. I guess the NFC winning is supposed to be bullish for the market or bearish.
I have no
I
idea.
thought it was to be bullish, but then Brady won it all those years, and that kind of messed it up. So,
I don't know.
yeah, keep an eye on unchanged. If you're down in some of your stocks or trading lower, see if they can get back to unchanged and shoot for the previous day's high for a lot of stuff. Is going to be a really a good distance away, but you're
Okay,
dealing with the low and the close.
I'm being corrected in the chat. I guess my use of the word emergency is incorrect, but it is a meeting under expedited procedures. Okay, so I see the words expedited procedures, and I still think something's up. I can't. I mean, I'm sorry. It's just like it says it right there. Advance notice of a meeting under expedited procedures. So I guess we'll find out more later in the day.
I mean, don't they have to raise rates today? I mean, if they're
Well,
doing
you
this,
don't have to do it today, but it is worth noting that the market is pricing 100% chance of a rate hike in March. It's just a question of,
it ain't March yet.
well, it's a question of how much more beyond that, though. So, UCC TGG, however you say that in the chat, where is Triple D? He will be here if and when he can be here, but I think he's having himself a bit of a morning here because if you just look at the market, you can see things are a little bit wild right now. I mean, there's no consensus on either side of the coin, so that's why he's not here. I think he's trying to figure out what the hell was going on, and if he can join us, he can join us, and if not, then not. But we're gonna keep going.
He's trying to be efficient in an inefficient market. There's probably a
Yeah.
lot of things out of whack. Different different ETFs
Well,
and different stocks.
Everything just sort of turned at like 7:30
Right
this
here,
morning. Yeah,
right
7:30
here,
this morning, right?
right. Yeah,
Yeah.
Actually, before before I took Perry out, and then I saw someone, Bill Big D, in here said, "Wow, we're in the green now," and I'm like, "What?" And then there we are. So,
Yeah.
um, yep, he'll let us know what he sees out there in a few minutes, but it's a
What I want to know is so we have this 8:30 TV appearance because Bullard is the person that sent the market into a tizzy last week. What I want to know is like, are any future Bullard comments already priced in,
well, you would
or
think so.
I don't know. I don't know. I don't know. Like typically, you come in every morning and you have a general sense. Oh, like the market is up because of this, or the market is down because of this, but I have no idea which way things could go today. I mean, any new like I just said, any new comment from any diplomat from the U.S., from Biden, from Russia. I don't know. I will say this though. Brian Sullivan from CNBC, if you don't follow him on Twitter, he had a very, very good Twitter thread over the weekend. Probably the best thread that I've seen about what's about why this whole Russia Ukraine situation is going on. And the long and short of it is really, in his view, just comes down to oil and natural gas and energy, because Western Europe gets all their energy through pipelines that come through the Ukraine. And I recommend reading that Twitter thread. It was a good thread about just what's going on here. Now, as I say that, we are joined by a special guest right now. Special guest is one Dennis Dick.
Hi.
Dennis, good morning.
Holy. That
Holy.
was a rally of rallies, like sitting there and you're like risk off, you're getting risk off, and then all of a sudden you're like, what the hell just happened? The futures blast off 20 handles. And then you're seeing, okay, what's commentary? The next headline.
Yeah.
I mean, all we are is headline driven here now. Technicals don't matter. The technicals tell you where you're going after you get the headline, but the headline's going to dictate the next move. So the headline comes out of the blue at 750 or 745, and I'm like, holy crap, we're just down, and now we're like rallying to green. So I mean, it's a tricky market to trade right now technically, and if you're not paying attention, like one of my buddies, Bright Trading, just got up for 5 minutes, came back down. He's like, oh my god, I just left for 5 minutes, and I come back to my desk, and it's a completely different market all of a sudden. So I mean, the headlines here, I was sitting at my desk, so I was actually able to profit from it a little bit because I'm turning around like, you're in the pre-market, so the stocks don't respond quite as quickly as the futures are going. So you're like, buy stocks, sell futures, or selling SPY. But I mean, now you come down and we just dropped. I've been talking to you for 2 minutes here. We dropped 8 candles. So Bullard coming on here at 8:30. So who knows? I mean, obviously we're selling off a little bit here because they're probably going to be scared going into the Bullard interview, but maybe expectations will be that he's going to be so hawkish and he won't be that bad and he'll rally. So I mean, now we got to talk about expectations going into a CNBC interview. I mean, like the thinking that's involved in this market is extraordinary right now, and just being ready for the next headline, because the next headline changes everything. So you're looking at the chart and it looks like a good setup. It doesn't matter at all. If the next headline drives the whole market down, your stock's going down. So headline driven market, we saw this back. Obviously, when we were in COVID times, we'd moved away from it for a bit, but we're right back into it. Interest rates and Russia. Those are the two headlines that matter right now.
I would say to try and just like put the goggles on, the Oculus goggles.
Yeah,
Hey, did you see Did you guys see the commercials for the metaverse?
No.
Yeah,
Which one?
did.
Which one?
I did, but as soon as I realized what it was, I started booing.
Which one, Joel?
It. What did they? How do you describe it, Spencer? I mean,
it was
by who? Who was the company?
By Meta. It was
Meta.
It was a commercial for Oculus.
I missed that one.
For the goggles.
You know why? Because I'm watching. The problem is I was watching Canadian feed for a while, and then I switched over to the US feed.
Oh.
So Canada, they show you their lame Canadian commercials. We don't get your.
You don't have the metaverse up there. You guys don't.
We get some of them, but we don't get them all.
You guys don't have no metaverse in Canada, I guess. But
no, we don't appreciate.
I think the metaverse. this is like, I know everyone's like, oh, the metaverse is never get. I don't think. I think we kind of live in the metaverse. I think they're obviously
According to
going to
Elon
develop.
Musk, that might be possible. Actually, did you see that interview he was talking last week? Did anybody catch that one? He said like there was like a 10% chance that we're just living in a simulation right now.
Yeah.
Like basically implying like you're already in the metaverse, you just don't know you're in it. And this is
Yeah.
the simulation of something else. It gets you thinking. You're like,
Okay.
oh, maybe we are just playing a video game here, and like somebody actually is just controlling us. Mitch, did you see that?
Joel, what you need to do is have me on PreMarket Prep Plus, and I will actually go into the metaverse and meet you there.
That's true. I did see. We did a show, the roadmap. We did a Thursday show last week from the metaverse.
Meta Mitch.
Meta Mitch.
Pretty funny.
That's
Meta Joel.
well, just before we go back to the commercials and stuff, Dennis,
Yeah.
did you see the commercial where they just had with the code, the what's it called again?
I did it. The QR code. I did
The
it.
QR code. Do you see that, Dennis?
I'm guilty. You know what? Hate me all you want.
Dennis, this was
I think I miss a lot. I Canadian that don't show half the commercials.
they.
The Canadian.
So
feed.
they just
I
had
should have went
this.
to the States and watched it with you.
They had this floating QR code on the TV.
Yeah.
And that was it. You know, so I'm sitting there with Dana and Garrett, and we're like, whoa, what the hell is this? And like, we're trying to guess every commercial.
Yeah.
And we're looking. And I'm like, man, I don't know. I don't know what it is. And then Dana, I'm not doing it. And finally, Dana got up and she did it. You know, put your phone on there. And it was for Coinbase.
Oh, they had. That's cool.
Yeah.
The absolute best part of that was it. The traffic was so overwhelming that the app crashed like twice.
Yeah, I heard that part. Everybody's hitting it. That's smart though. That was a smart commercial. They just couldn't handle the traffic though.
Could not handle the traffic.
That's not good. This has no reflection on our clearing systems. I don't know.
Well, I mean, it was a great idea to send traffic to your site. Like everybody would do that, right? Go up there.
They paid $7 million to put a QR code on the screen for 30 seconds, and it throttled their website.
It was just sitting there, the QR code.
You
know what? That would have been one of the best commercials of all time if the website didn't crash. Probably
Right.
Like from the hits. Like you said, or like waiting. It's like, well, I'm just gonna go stand up there and like hit it, and it takes you there. Like, I mean, you actually got driven to the site. That's smart, man. Somebody was smart.
Yeah.
They just obviously the IT people weren't ready for it.
Yeah. Mitch thinks I did some cardinal sin or something for scanning this code. Come on, I just wanted to see. They're dropping Bitcoin. It's a Bitcoin drop.
I immediately pulled up the futures in Bitcoin to see what was going on too. Like, I bet you Bitcoin's gonna get a little pop. But then I don't know. I didn't know. I didn't know.
I used to always sit there and like you're sitting there and I mean the Super Bowl trades. You're sitting there and trying to analyze what's going to move, what's not going to move. Stocks are 24 hours. I mean the futures are there, but if you had individual stories and stuff, that would be pretty cool.
Yeah.
Trading your stocks right as the Super Bowl's going here. Oh, that commercial sucked. Short that stock.
No, this comes back to my overarching theory or idea that in the future everything should be tradable. Everything. You want to buy or trade a sports team or a game, do it. You want to trade a commercial, do it. Everything should be tradable. This is off topic now, but while we're on the topic, did you guys have a favorite commercial from last night? I'm just curious because
I'm going with that QR. I didn't even see it, but I'm just going with that because that was just a fantastic idea. My favorite one of all time was still the E-Trade commercial.
Dude,
remember the E-Trade? I talk about that every year.
You didn't see
where the monkey was sitting there and he's got the E-Trade. The monkey's got the E-Trade shirt on. He's just sitting there banging the drums, and you're like, "What the hell is this?" And then they flash on the screen. We just wasted $2 million. What are you doing with your money? That may be one of the best of all time. But that QR code's smart, man.
Dennis,
they didn't spend anything in marketing. They just stick it up there. It's like,
Dennis, you didn't see the E-Trade commercial last night?
Yeah. Well, I did see it. What was that one?
The baby is back.
Oh yeah, the baby.
They brought the E-Trade baby back after like 10 years, and he's still the baby. It's amazing.
They needed to do that.
We
love the E-Trade baby.
I read some stats about companies that spent a lot of money on advertising in the Super Bowl. Like they went back like to like in the .com, and like all the companies that ended up blowing up like in the .com bubble, they're the ones that spent the big. It's a very, very negative indicator. And then also just to stay on these lines, I mean, how do you like what Vegas did with that spread? Okay, kept it low. three and a half. So all the people were thinking, yeah, the Bengals have a shot. I'm going to go with the money line on the Bengals. I'm not going to take the points, all right? And I was tempted. I was pretty sure the Rams were going to win. They moved that spread 3.5, 4, 3.5, 4, 3.5, 4. Boom. It ends up being 4. All the people at 3.5, they lose their money. All the people that bet the money line. Why would you bet the money line if you could get the points? All the Cincy people on the money line, they lose their money too. And so
Punish the maximum amount of participants.
they did. And also, I'm not going to go into this because we got to cover actual stocks, but Barron's went in depth in online gaming.
Yeah.
And they came up with some statistics, and the statistics that I talked about individual debt and crisis mounting from online gambling, it's like since 2018, the people
And by
following
online
their
gambling, do they mean all the Robinhood accounts?
No.
good question.
And the day traders?
Good
There's
question.
a lot of people who are treating the stock market like gambling too. I
Yep.
will say that. I mean, we try to teach it as a business. We try to teach it as a show, to learn. But there's a lot of people that are just coming on and buying this stock and selling this stock and, having fun with it. So a little bit of both there.
Yeah.
I had one more thing. Oh yeah, we're just last thing on the commercial front. Then we can go back to the actual stuff at hand. But I saw a lot of people on Twitter last night, like crypto bears, that are like, you know what? I never see commercials for money. You don't have to convince people to buy money. Why are they spending all these millions of dollars trying to convince us to buy Bitcoin and buy crypto? You don't see them spending
Buy US dollars.
Buy dollars. No, you don't see ads for dollars. It's just a thing.
You see that silver ad still though.
You don't
buy
have to convince people to buy dollars. Why do you got to convince us to buy Bitcoin? But let's move on now. There was one
That's the only thing that keeps it going.
There
You
was
gotta have a new buyer in there.
There was one non-macro news item from over the weekend. It was the M&A headline out of the Wall Street Journal that Cisco, and this has been, I think, reported previously, that they had made a $20 billion takeover offer for Splunk, SPLK.
Yeah.
So
Yeah.
I
forgot about this.
I think the news of the offer wasn't new, but the amount, the cash value of it was $20 billion. I think that detail was new. So if you pull up SPLK the chart this morning, you see just open. Well, actually, it came out Friday. I'm sorry,
Friday night.
yeah,
I saw this headline. Splunk just started blasting off Friday night. I was like, "What's up?" And then, Wall Street Journal's up, and you see the headline, and boom, went up significantly there. And I don't know if there's going to be a deal here to be had or not, but the market obviously still trading up $10, is saying maybe there's the possibility that there's a deal. That's a big move. I mean, when you get these 20-point moves and your stock's been in the gutter, I still think you take the money and run every time you get one of these M&A rumors, because I don't think a lot of them materialize, not in this market.
Wow, spike over 134. Not much there, but I'll throw out the the Cisco. I mean, I don't know what they're going to do, and I don't know what the heck this company is going to do long term. But when you see a chart like this, and you just have a trading range for so long, right? This is going back to December. At least it stopped going down, right? Is one thing you can say. That top of the trading range is like 124. If you have any kind of bullishness in this, or you think there's any kind of chance of a deal, I mean, I think it just has to come back to this 123, 124 area and hold. And I think that sets up as a bullish formation. For me, just technically, I have no idea what's going on with the deal. What was last month's high in the Splunkster? Man, you got monthly highs bunching up there too. 122.26, 124.08, 124.72. So make or break. I don't know what Cisco's doing, but let's see if this thing can hold 124. To me, that'd be an indication of a move.
Cisco's shrugging it off. I think that people are looking. You'd think maybe it'd get hit a little bit on it, but I mean, there's not a deal here right now. Just because they made an offer doesn't mean there's a deal imminent. So obviously Cisco doesn't have the growth either. So maybe they think it'd be a good thing, but I don't think you're going to see. You don't know. I mean, this M&A stuff you don't know. I just know that a lot of them don't materialize. When my stock pops 20% or a stock pops 20% on an M&A rumor, usually ring the register. It's the right call.
Look at this Coles too. I mean, just Dennis, just reiterating what you're saying. I mean, we were all skeptical. I mean, we were all right. Okay, all right. Value. What's their name? True Value. Value Line. Who was looking at them?
Yeah.
Like,
Starboard.
taking it private. They still are.
Right. Right. But it was like, oh no, 64 is not good enough. Okay. Who's coming in at 65, 66, 67? Right. That was their rumor. Oh, two or three
Yeah.
hedge funds were
Tough
looking at.
environment.
Yeah. Look at that. Hit
Money's getting a bit
64.
tighter.
Yeah.
And I don't know.
Cost of carry going up. I mean, I don't
Yeah.
know. I mean, this isn't official, is it? That this
No,
is
no, but there's a lot to it. I mean, they've interviewed, they want the company. I mean, it's a difference too. And I'm going to say there's a big difference as well when you're looking at some of these stocks that actually have reasonable valuations. So you look at something that's trading with a
right.
ridiculous multiple. It's like, well, I don't know if they're just kickstarting a rumor on like Peloton or something, But then you look at Kohl's, and I'm like, well, it's cheap. I mean, so it's not absurd to think that somebody would come in and take it private or would come in and buy the company. So I still say you got to look at this market with the valuation goggles on if you're investing. I don't even know in this market if it's that investable right now because it seems like every time you buy anything, you're getting killed. But I mean, investing is supposed to be about the long term. There are deals out there right now. I think if you're looking with your valuation goggles on and picking up good companies at reasonable valuations, you'll be happy a decade from now. But I don't know where we're going to go 5 minutes from now because Bullard's coming on here in 2 minutes on CNBC.
That's the catch, right?
Yeah, and now hopefully I can stay with you. I mean, if we start to get nuts with the futures, I may have to leave you again. I would think we're going to have some nervousness, but it's all going to be about, his tone. Like, okay, he said some hawkish stuff. He tanked the market. Is he going to back off those comments a bit? Are they going to say cool it a little bit because we don't like what the market's saying? Because if he does that, the market will rip higher. Or is he going to stick to his guns and say, look, this inflation is a serious issue. We've got to get a handle on it. We need to start raising rates right now. I mean, they start saying stuff like that, the market's going to tank. It's a live interview. It's a good get for CNBC. We got to get Bullard. Get Bullard on, Spencer.
I can reach
We'll
out.
work the phones. We'll get Bullard on pre-market prep. But anyways, I mean, it's going to be market moving, and it's all about expectations. It's like this CNBC interview is going to be like an earnings report.
Kind of.
You go into it with certain expectations. I think the expectations are that Bullard is pretty aggressive. He's probably going to say something to spook the market. So maybe he starts a little bit hawkish. But if he's just says anything that isn't that hawkish, the market could actually rally on it. So it's a coin flip here. I don't know which way we're going to go, but I think we're going to chop a lot during the interview.
The only reason that this specific interview right now is we're giving it the weight that we are is because Fed governors they speak all the time on CNBC and other places, but Bullard was the one that moved the market last week with his comments about what did he say? He said a half point rate hike and potentially before the March meeting. And he's been. I mean, look, he's been the loudest talk in the room for quite some time. I think that's kind of what he's known for, but. This is the guy that moved the market on whatever day it was. Thursday? I don't even know anymore. I think it was Thursday. So, yeah, I mean, what's he going to say now? I don't know. Well, we'll find out. We'll have to just keep an eye on the overall market. We'll keep an eye.
All I can say is you're going to get a lot of chop. There's going to be a lot of nervousness coming in. There's going to be a lot of chop. So I don't know, directionally where we're going to end up, but I'm going to say we're going to have head fakes in both directions during this interview. So it's important.
And
so we'll keep listening a little bit in the background. We've got our team listening in the background. We'll try to get the commentary as we're going here, what he's saying. But we're going to keep talking stocks here too because we've got a big earnings week here. Nvidia is going to report on Wednesday. We got Shopify going to report. I'm just looking at my list. Roblox is reporting tomorrow. Upstart, Win. I'm long Win still. Got DKNG is going to be Friday, which would be interesting as well. I mean, there's some big earnings coming up, and then after that, we're going to get into the retail earnings season as well. Walmart does kick it off on Thursday.
Yeah, Walmart is this week. Nvidia, I don't know if you said Nvidia yet, but
Nvidia is the big one, obviously, this week. So it's important week for earnings. It's an important week for headlines. For what the headlines we care about as traders here. And yes, you have to care about headlines. If you're just saying, don't look at the headlines, look at the charts, it's very hard to make money in this market. You got to be listening to the headlines because they are driving the next move.
Yeah, and so
hear the headline, then use the technicals to figure out where we're going off this headline. But just to randomly look at your chart and say, I think this is going to happen, I think this is going to happen, you'll get nailed by headlines left, right, and center.
Great comment here from Zen Bullish. Family and kids are now saying that Spencer Israel, that's Joel Elconin, Dennis Dick, Mitch Money, and Anne-Marie Band are our therapists, saving our sanity from these volatile puppy mind-messing markets.
Oh, they mess with my mind all the time. I need a therapy. You know what? The chat, you're my therapy. I read your comments, and sometimes it helps me off the ledge too, because you can't help but get caught up in it. And I'm like, oh, you see the market going down and get stocks going to hit hard. You got to get your sanity back and say, look, we're still in the same choppy market. There'll probably be a headline that drives us up tomorrow. I mean, it's all about psychology. Right now, trading is a lot about psychology. Yes, there's a certain aspect of predicting. Yes, Bullard is starting to talk right now.
Yeah,
there's a certain aspect
he
of
hasn't said
prediction.
anything yet, Dennis. Don't worry.
Numbers indicate inflation is broadening. Well, that's not a great comment, but we'll see. It's going to be maybe it's going to be a nothing burger.
And let's not forget about the and any given moment, any new thing can come out of Russia or Ukraine or the White House, and that's a whole other thing, right? So
those are two.
You just wait for the next rug pull all the time, right?
Right.
So it's again, this market, that environment that we're in is very. I'm trying to.
Yeah,
sorry.
Keep your eye on it.
I'm trying to watch what he's saying.
And it's Valentine's Day. I mean,
and Valentine's Day can be really rough sometimes, especially if you forget to get your wife a gift. Sorry, I digress once again.
All right, I don't I'm saying. Right?
You trying to tell us something right now?
Did you already forget, Dennis?
I forget these things all the time.
Dennis,
I have
kids.
The kids remind me. Actually, no, I gave her flowers. I did give her some flowers there. Kids were with me, and we bought some flowers.
Watch out for the traffic around you.
We got a new house we're building. We're saving all our money. We can't afford gifts anymore. We're saving all our money for the house.
Dennis, your stuff is probably stuck on a truck trying to get over the Ambassador Bridge right now.
That's it. I tell her that. That's what you say is, well, it's supply chain. I forgot to get to the
supply chain issues.
Supply chain. I can't help it that they blocked the Ambassador Bridge. I had this awesome gift coming across here, but they can't bring it across. It'll be here next week.
Same thing with the flowers, right? The flowers are also stuck in transit.
Yeah. That's it. Well, the flowers I got here. That was the good news. The flowers did get here.
All right, so Bullard is not
he's bullying the markets again.
I don't know what he's doing.
Is he bullying?
No.
Bullard, are you bullying? We can. Here's the headline from CNN. We can do this without disrupting markets. Oh, he's trying to talk, but you know what? They're not believing it. We just went red. The bully Bullard.
Oh, he said he thinks. I don't think this is not a new comment, but the inflation reports justify a full point rate hike by July 1st, which is not it's not a new idea. If you look at the Fed Funds futures, there is a possibility of that happening. So I don't think he said anything worth really.
We're chopping around. One thing we promised to go into the view, chop. So we've dropped about 10 handles here. We'll probably pop, we'll probably drop. We're gonna go all over the place here. So as he continues
unchanged.
to talk,
I mean,
we'll let you know when he stops talking, and then he can start to trade technically again. Right now, you're in the middle of the headline, so trade technically isn't that great of an idea because if something comes out of his mouth, bearish or hawkish or dovish, and it's gonna be going the other way. So when he stops talking, then you can trade technically again. Technicals work fabulous in the absence of news. Really does. And then, but that helps with the news too. I mean, you got to have technicals too, because after the news hits, the technicals help to tell you where we're heading, to give you an idea of, well, where are we heading?
All right. We got Tim.
Oh, it's 8:35. Wait, where is Tim?
Tim, come save us, please.
I'm so distracted.
Save the show.
He's not even here. Oh my God.
He's not here.
He's listening to Bullard.
Lost all track of time.
He's listening to Bullard.
Wait, let me text him right now.
Did he send you? Did he send you an email saying that he couldn't come on today?
No. But fun fact,
he never misses.
I was
texting
Tim. I was texting Tim for a month or so. I'd sent him a bunch of messages, and he never responded. And it took me a month to realize I had the wrong number. But so I wasn't. I don't know who I was texting, but it wasn't Tim. But they were never responding to my messages, and I assumed that Tim just was ignoring me, but no, it was the wrong person. So now I actually have his correct number for once. Here, let me just remind him right now. He did say he would be joining us today. So that was on
He'll
Friday.
be here.
Yeah,
Tim never stood us. He's never stood us up before.
Fed
Fed needs to take action on inflation. Okay, well that's nothing new. There's no new information dropping here. We need to defend the 2% inflation target. So yeah, he's being hard on inflation. They need to be hard on inflation, but there's been nothing said, I don't think, so far about like raising rates right now, like tomorrow. So
okay, Tim Quast has entered backstage, which means it is time for Market Structure Mondays. Let's do that.
Why is that?
Wait, what, Joel?
I don't like
the Bushwhackers.
He's doing the dance. Good morning, Tim.
It's the Bushwhackers. Tim knows.
Good morning.
It's our Tim Quast dance now. We have a specific dance for Tim Quast because he gives us so much great information all the time. So that's my dance. It's my Tim Quast dance. I stole it from the Bushwhackers.
Love to see it. Happy Monday, guys.
This is it. That's all I got.
Happy Monday.
Back at you.
Our general sense of things is everything right now is sort of in the limbo as we wait for the next headline to come from Ukraine/Russia or from the Fed. What is your take on things here?
Well, options expire this week. Things like that get lost in the shuffle, and I continue to say that we tend to assign meaning to what the market is doing based on what we can immediately see in front of us. So, the futures are way down and all the headlines are everybody's concerned about Ukraine or the Fed, and then suddenly the futures are up, and then we root around for some reason to explain why they are, and we say, well, it's Sergei Lavrov who eases everybody's fears that there will be war in Ukraine. And I'm not sure how much of that is actually true, because if you look at the behaviors, you would conclude that there's not very much rational thought to it. Looking at Market Structure Edge, we said it's Market Structure Monday, so we talk about the mechanics of the market. Active money didn't lead the market down 2 days last week. The reason the market was down the last 2 days of last week was because short volumes remain very, very high. That's, the market's long or short, and it's 47.53%. 47% is very high, and passive money was a modest seller. If you look at the last 20 trading days, 10 of them prices were above midpoint, 10 of them prices were below midpoint. That's very much the behavior of exchange traded funds. So if you have high short volume and a perfect balance in supply and demand, prices will go down. So I realize that that's not nearly as interesting as wringing one's hands over what may happen in Ukraine or what the Federal Reserve says. But I'm also reminded of Will Rogers, who said, "Don't let yesterday consume too much of today." And I think that we want to look at what may happen in the next 2, 3, 4 days into options expiration.
So, that's what matters, and expectations matters. And I feel like your system is just a feel for where market expectations really are. Yeah. So, that is what everything is about. It's expectations, and then meeting or exceeding expectations. It's not about the absolute numbers. It's all about, what the market is feeling and how they're feeling towards certain sectors and certain stocks. So can we jump into your, let's look and get a feel for, what you think's happening this week. We're coming into the back end of earnings season, but there's still some big companies reporting. I'd love to see what the market structure is looking like on NVIDIA.
Okay, we can do that.
It's going to be messy. I'd say
sloppy.
It's going to be like a 4.
4.
Well, let's throw out our predictions here. I think it could be higher. No, you're right. It's been messy. Let's look at. I don't know. I don't even know what to predict. It's a tough one. Where is it?
It's actually a 10.
What?
It's a 10. But you want to know when to buy or sell it, right? So that's always the case. You want to know when you should do something, traders. And by the way, for those of you who are unfamiliar with Market Structure Edge, it is a way to incorporate the mechanics of the marketplace, the physics of the stock market, the regulations, the rules, the behaviors, into how you think about what prices will do. And we think about supply and demand. So the top graph shows you NVIDIA the closing price relative to its underlying demand. And then the bottom graph is supply. The supply chain of the market is borrowed stock. It's the way that the stock market works. So NVIDIA delivered some decent gains. So here's last Monday when we talked. And so you would look at this and say, well, demand is rising and supply is level. The trend isn't great, but if you're talking about the short term, 4 or 5 days, that will produce some gains. Once it gets to 10, then the probability of gains begins to diminish. There's no question that the market behaved oddly Thursday and Friday, but this tells us now, I mean, would you want to be in a stock that is 10 out of 10 and 60% short heading into options expirations? Not generally. I'm not saying that something surprising couldn't happen, but I would look at this and say that NVIDIA, if you traded NVIDIA, you want to be gone now ahead of options expirations.
I mean, the risk, isn't that the problem with this market overall and why we continue to be weak here right now? Because market participants are seeing risk from multiple places. You know, we're seeing risk from Ukraine. We're seeing risk from, obviously, interest rate, you know, a tightening environment. I mean, it's just like the market institutional money seems like it's a little more risk off right now. And I mean, you even say, do you want to be long into the option expiration? I was like, you got a great point here. I mean, we got a lot of unknowns in the macro and the picture here. And then, you know, you have an option expiration coming up here. It's a tough sell to say why I need to buy stocks today.
I agree. And if you're going to buy stocks, buy cigarettes, because
are the Philip Morris doing well?
You'd be a lot better in Philip Morris than you would in tech stocks.
Yeah. Everybody smokes when the stock market's going down. Everybody starts smoking. I consider smoking some days.
Exactly. And even Philip Morris isn't great from a supply side because the short volume is well above trend. But in the short term, as prices fell in the broad market, supply fell in Philip Morris and demand rose. Well, that's what you want to follow. Who cares what prices are doing or what the sentiment is in the market or what things are concerning investors? You want to find things, traders, where there is a supply-demand divergence. That's what you want. And notice that Philip Morris has been a 5 or better the entire 30-day period represented in this graph. And look, we prefer Micron and NVIDIA and Tesla. Those are much more interesting stocks. But if we're interested in making money, then we have to go where the money is. And there you have it. That's the stuff that you want to own right now. That's what you want to look for. If I look across the dashboard, so the dashboard for folks who don't use Edge will tell you what all of the money is doing all of the time. It can be as narrow as airlines and cruise ships. Why did they do well last week? One of the top performing stocks last week was Carnival Cruise Lines. And you can see the demand side was strong and the supply side was constrained. Well, as soon as that changes, and it already has, then you move on. But you can see where all of the money is. And I look across here at the demand side, and the demand curves are just not very good. And all of the supply trends are up. If the supply trends are up and the demand curves are not, prices are going to have a hard time rising. I do think, because this is typically what happens, that you get some opportunity for gains no matter what happens into options expirations. So there's volatility expirations Wednesday. That's not just VIX, but the whole volatility as an asset class set of derivatives that expire. Then Thursday are AM dated index options expirations, and then Friday are the what we call classically the triple witching expirations. So there will be some money that chases stuff up into that. But you certainly want to look to see what the demand curve is to see where that money is going. I'll give you an example. So if I look at Benzinga, Happy Valentine's Day, February 14th, where is money likely to go? Well, out of this group, if you looked at Philip Morris, Halliburton, great energy stock, I mentioned it last week, Tesla, Travelers, would you pick Tesla or Travelers right now? Well, let's just look at the two. Here's Tesla. It's a 7, topped, 46% short. The trend is up in short volume. And then you look at Travelers. Travelers is a 9 and top, but short volume is half that level. It's trending up too. If you're going to pick something out of that group late in a cycle like this, you're going to take Travelers over Tesla. It's just, you have to look where the money's going. And there's the supply-demand divergence. It's not great. I'm just saying that if you're looking at two very contrasting things like Tesla and Travelers, you always want to increase the opportunity, the probability of gains, and that's what you would pick instead. It's not the thing that I would necessarily pick. I'd pick Philip Morris. That's I told edge users, if you're going to pick something to trade into the uncertainty of options expirations, it would be things like Philip Morris.
What about? Oh, no, I guess that. Well, yeah. Can you look at MO while you're at it?
Yeah.
Yeah.
ML.
MO.
MO.
Yeah,
Oh,
let's see.
sure.
Because
Yeah,
Philip Morris is running, but
Altria.
Altria has just been sitting kind of hanging. It almost looks, the chart actually looked pretty decent, to be honest. Like you got the chart, little cup and handle going on. It's a defensive stock. Everybody smokes when the stock market starts going down. I don't mind the MO setup here. Let's get some confirmation from Tim, though.
Right. So there's only one difference between the two. So Philip Morris and Altria both have spent the entirety of the trailing 30 days at or above 5 from a demand side. See this? Right here. This is the green part, and this is the price, closing price. So that tells us that is a low volatility choice. All that big money out there, the BlackRocks, Vanguards, and State Streets that are tracking a low volatility income generating portfolio own this. But the reason it hasn't done as well as Philip Morris is the supply side. That trend is up and it's 52% and continuing to trend up. So that tells us that there are not long bets in MO into options expiration. Still a very good stock to own during periods of volatility.
You said there are long bets?
There are not. So if we contrast, let's look at PM. So how do we know that people are buying calls on Philip Morris? Well, the supply side will tell you, even though they're very close to the same levels, the fact that this is declining when we're 5 days out from volatility options expirations. The very common Goldman Sachs technique with options is to buy 5-day out of the money calls. All right, well, that's happening here. That's what's happening. It doesn't absolutely mean that will produce a gain in Philip Morris, but it's a pretty good bet. It's a pretty good probability. And how do we know? Because the supply side's coming down. Mechanically, what that means is that Goldman Sachs, looking at its exposure, I'm just using them as an example, they're saying, okay, there is more interest in being long Philip Morris than short it, so we will follow through and do the same thing to hedge our exposure. They're going to follow that direction to hedge themselves, and you can see it.
I mean, if I'm looking at this Mo chart here, I mean, well, first of all, the Philip Morris looks a hell of a lot better, right? As far as up,
okay.
right?
Yep.
I mean, for me, it's all about $52 here. I mean, I don't know when this thing is going through 52. What's at 52? But you go all the way back to the middle of 2019, and that has put a cap on the stock to the up and down. So it's still $2 away. I mean, that's what I'm looking at. I mean, if you want to play it for a $2 move, yeah, but I mean, it hasn't moved. It hasn't broken out. It's just a real good level if you're trading at either long or looking potentially to exit a long or a potential short. But that's a long-term chart there, indicating major resistance at 52.
Could be. What I think about, and I don't get there all the time. No, I don't think anybody does. I think about 1% a day. If I could get 1% a day, what an awesome return that would be across the year. Of course, I'm only trading a small, maybe 30% of the trading days. But if you can deliver that, you can produce 100% return in a year. So often we don't think about the significance of finding something that has a high probability of giving me 1% today and tomorrow and the next day. What stuff is going to do that? It's not a sexy approach to the market, but it is a highly profitable, low risk approach. And one of the ways to do that is to make sure, particularly during periods of duress in the markets or geopolitically or economically or from a monetary policy standpoint, is own stuff that's at least 5 and has constrained supply, because that's very likely to do better than everything else. And it's not sexy. It's just effective.
The best strategies are not sexy, though. Like,
Right.
I've been in this business for 22 years, and if somebody watched me trade, they're like, holy crap, is this boring? Honestly. Like, I make a lot of trades, but they'd be like, you're not flying in these things and your P&L ain't blowing all over the place and riding, and like that's what everybody envisions. They envision like the gambler, and you're like, you're making millions and you're losing millions and you're all over the place, and and it's more just
that's no fun.
grind.
Right.
It's grind. This is what if you were to see how Citadel, it's a billion trades all grinding out a small little fraction of a cent on every single one, grinding the market makers, grinding that spread, making the pennies, making a penny, making a half a cent, making a quarter of a cent, just grinding. Consistent, though.
That is exactly right. There, a fellow who used to be a specialist on the floor that I've known for many years, he said when Citadel bought their floor operation, so this is a little weedy discussion, traders, but we're talking about the specialist system on the New York Stock Exchange floor and what has replaced it. And those are high frequency traders. And he said the very same thing, Dennis. He said the Citadel team came in and said the days of making 25 cents spread are over. We want a quarter penny. We want a quarter penny. The least risky behavior in the market is high frequency trading. They don't want any exposure to time.
No
time
risk.
Is risk. No risk. That's why your limit order won't fill. I did a little test for edge users last week, and I explained why you have to pay attention to the liquidity in a stock. Here's MLVF. So I just illustrated this. I said this stock, it's not a liquid stock. If I look at it in a portfolio, so let's do that, and I'll show you what I mean.
You're looking at a very illiquid stock.
Very illiquid stock, and here's the trouble with trying to keep gains and stuff like that. I will trade things only that have liquidity of $5,000 per trade or more. Generally, there are very few exceptions to that. And here's why. You can't make money. A high frequency trader won't take the other side of a trade. So you could say, well, the stock went from 1650 to 1680. Wow, I'll take that gain. That's a nice gain. The trouble is the 1.5% in a very short period of time. Well, that's great to me. However, let me just scroll down here to MLVF. Let me just search for it. The trouble is your limit order will never fill. No. You can put in a limit order over and over, and it's never going to fill. I'm wasting time here.
You can't make that spread. They've monopolized that spread. Like, if it's a 20-cent spread on a $16 stock, you think you're just going to sit on the bed and sit on the offer and get filled and make that 20 cents. They'll just step ahead of you every single time. The seller comes in to sell to you, they take the other side. The buyer comes in to buy from you, they take the other side. So they jump in. There's a middleman that's jumping in and taking the fill away that you should be getting. I mean, I've complained about this, for the better part. We know, Tim, I've been complaining about this for 15 years. But they like price improvement.
It is a racket.
Drink the Kool-Aid.
This was a great discussion. Great discussion.
Before we go, Spencer, this is the thing. See this right here? This is the dollars per trade. So if you try to buy more than $1,500 of this stock at a time, it will never fill. Even less than that. So I traded 300 shares of it several times through the day, and I lost $20. But I was illustrating a point. And notice how high the short volume is, 72%. So there's no real liquidity. That's why you have to be very careful about the things that you trade. You want to keep stacking the probabilities in your favor in a market where there's liquid,
use the liquidity.
Stable,
I'm the same thing. Yep. So if you take back, and this is an important conversation, I want to keep Tim on just for a minute here. But if you take back to when I started trading and at Bright Trading in 1999, we had lots of traders trading illiquid stuff because we didn't have these off-exchange market makers that were stepping ahead of us all the time. Yep. So I traded preferred stocks. I'd make a market in small caps. I had a small cap market making algorithmic system myself that traded on the exchange. and it would sit there and make markets. And it was if the spread was tight, it was if the spread was 50 cents, we'd go 48. We'd tighten it up a little bit, and then there's somebody else going 46 and 44, and the spreads got tighter. But the off exchange market makers have blown all that apart because they have the right to match they have not the right, but they have the privilege to match those orders by taking the other side. They get the first dibs. So somebody comes in and tries to buy from you, they're like, oh no, I'll sell it there. So they're always sitting there, so they can actually trade within the spread without posting any quotes of their own. It's a perfect system. So, and that's why the small caps haven't participated in the electronic trading and the tightening of the markets. We've tried to tell regulators that. It's blatantly obvious. Like, wow, small caps have always been a mess. That's what they tell you, Tim. Small caps have always been a mess. Well, sure, the whole market was a mess, though. But why did the mega caps get all this liquidity? Because you got the institutional traders saying, I'm not going to trade something that I can trade $1,500 a trade on. I can never get in and out of that. For me to move in some serious money, I'm going to move that stock 20-30%. There's no point to institutional money going into a stock like that, MLVF.
And this is what big institutions think about. This is, and here we're talking about Ukraine and monetary policy. I'm not saying those things aren't important factors, but if you want to trade profitably, which is the whole point of these discussions, then you can only beat the market by understanding it. But once you understand the 100%. Things that are going to harm you, then you have to at least go in open, clear-eyed, and recognize the things that are going to work against you and work in your favor. You want to stack as much as possible in your favor to improve the probability of getting a good return, or as I like to say, take gains, not chances.
Tim Quast, always a pleasure. MarketStructureEdge.com, link in chat, in description and on screen. Tim, we'll talk to you again next week. Thanks a lot.
Good to see you guys. Have a good week.
All right, yeah, that was a good discussion. So I'm glad we kept Tim a little.
Just to sum up,
even though I tried to keep things going.
What Tim's trying to say, what I'm trying to say is, you can't trade these small cap stocks with 50, 60, or 5, 6, 7% spreads. Yep. You just can't do them. The off exchange market makers have a monopoly on all those stocks. They're making the 5, 6, 7%. I'm not going to go in a stock that I'm losing 3, 4, 5% on, or then MLVF 1 or 2%. I can't go in the stock and lose 2, 3, 4% just to get in the trade.
Right.
So, the margins aren't that big. Your edge is completely gone. You have the prettiest setup and prettiest technical, chart of all time, but you can't get in and out and move your money in and out. You can't. That's why I stay in the mega caps, Joel. That.
I mean,
every single trade I make, Bank America, it's boring, but you know what? I can get in and out of it. You want to move $1 million worth of Bank? I mean, not saying I'm moving $1 million, but if you wanted to buy $1 million worth of stock in Bank America, you can do it within a dime. You can get it done. You can get it done during the middle of the day, probably within a couple cents.
Cheaper than that, yeah.
Yeah, so the institutional traders in there saying, why am I going to go trade some little by appointment only, mid-cap regional bank that I can't get in and out of when I can trade the big ones? And that's where the money continues to gravitate. Trading capital continues to gravitate into all those, because that's what the market structure demands. The market structure demands liquidity. Only way to get in and out of a stock. You can't be giving up your edge, just by, getting in and out of the trade. The price impact is more than your edge. You lose money. So you have to have low price impact. You're not going to move the trade. I'm the same way. I try to get in and out. You as a retail trader are a little more advantage if you're a smaller trader and you're trading $5,000, $10,000 or even less than that. You can get in and out of stocks and can maybe pick on some different things. But if you got any serious money, you got to stay away from small caps because you can't get in and out of them. There's just not the liquidity.
You can, but without moving the market. That's the.
But you're giving up all your edge, so you're going to end up losing money. Just like to Tim's point, you can trade that stuff all you want. Sure, you can trade anything, but you're going to lose money on it in all likelihood, because whatever edge you had is going to be evaporated by the price impact of your trades.
Yep. All right, 9 o'clock. We have to wrap. Unfortunately, we are out of time today. They will do ticker time on our next show, live trading. So stay tuned for that. Joel's going to hop off for PreMarket Prep Plus on PreMarketPrep.com. We're going to hop off as well. But before I go, I wanted to echo a comment I made at the top of the show. We started on last week YouTube memberships. I saw a couple people in the chat. You go to youtube.com/Benzinga. See that little join button right there. We've got a couple of custom emojis. You want an emoji of me, or of Mitch, or of Luke, or of producer AB? Check him out right there. We'll be adding more exclusive benefits down the line and more tiers. But check out our new YouTube membership program. Thanks to Enver for getting that going for us. And I got to hop as well because live trading with Benzinga starts at 9:05 a.m. Eastern Time. This stream will end and redirect to those guys. So thanks to our guest, Tim Quast. Thanks to all of you in our chat, as always. Thanks to our new members. Thank you. And please remember that all the information from our show is meant to be used as informational purposes and not for investing or trading advice. All right. That's it for me. Oh, reminder, Benzinga Pro, get 25% off. There is a link in the description and pinned to the top of our chat. Get 25% off Benzinga Pro by using that link specifically. All right. I'm hopping off. Live trading with Benzinga going live in like 3 minutes. See you guys over there.